Are you a small investor looking for a good investment that can beat inflation and build wealth for you? Based on historic performance, both real estate and stocks have given good returns at an average over long term. But if as a small investor, you need to choose between these two and get started on your journey to building your wealth, then investing in stocks is the ideal choice. Keep watching to understand how stock investing is better and safer than real estate to get started. Welcome to Save and Invest Smartly. Let us first compare how stocks and real estate have performed in the past. But how do we compare? We need to first find out what is CAGR of both these investment types and then compare which has performed better. CAGR is compound annual growth rate, which is the rate of return at which the investment has grown if the profits were reinvested. This is one of the most accurate ways to calculate and determine returns for anything that can rise and fall in values over time. Hence, this method is most suitable to assess the performance of stocks and real estate that rise and fall in the value over time. You may use the website www.cagrcalculator.net to easily calculate the CAGR by giving the start and end values with period. How do we calculate the CAGR of real estate investment in India? Let's say I bought a land in India at rupees 1 lakh in the year 2010. If the current market value of this land is 20 lakhs, then the CAGR works out to be 34.93%. Does that mean real estate has given annual returns of approximately 35% in last 10 years? No. Very few properties may appreciate at this rate, and that cannot be an indicator for the entire investment type. Let us see an example in stocks. Bajaj Finance was trading at rupees 60 in 2011 and the current price is rupees 2000. This works out to be 42% CAGR over 10 years. But did the stock market return 42% CAGR? No. Hence, please understand that based on just few plots or few stocks, we cannot compare the investment types. We need to compare the broader index that represents these investment types. All right. I can use Nifty 50 for stock market as it is the representation of top 50 large cap stocks in India. But do we have an index for real estate? Yes, we have NHB Residex, which is India's first official housing index. This is derived based on historical housing prices from 26 cities in India and hence a good representation of the real estate market performance. Now that we got Nifty 50 for stock market and NHB Residex for real estate, let us compare both and check which investment type performed better. For the purpose of comparison, I've taken the NHB Residex of Mumbai city as it can be a good representation being the financial capital of India. This NHB Residex index has grown from 104 in 2013 to 144 in 2018. If we calculate the CAGR based on these values, then the CAGR of real estate is 6.72%. During the same period, Nifty 50 has grown from 5,842 to 11,356. The CAGR of stock market based on this is 14.22%. Clearly, stock market returns is far higher than the real estate. If we consider the commercial real estate, the returns could be slightly higher than 6.72% and could be a better option than fixed deposits or other debt investments, but definitely cannot beat the performance of stock market. Now let us see the other aspects where stock market investment is better than real estate investment. You can start investing in stocks starting with very less amount. There are many discount brokers who allow you to open demat and trading accounts with zero account opening charges and zero annual maintenance charges. But to start investing in real estate, you need bigger amount. In most cases, you may not be able to start the real estate investment without taking the loan from bank. The transaction charges that you pay for stock investment is very less. Most of the discount brokers don't charge brokerage for stock investments. You may have to pay only the exchange transaction charges and taxes. These may be less than 1% of your investment. But in case of real estate, there are high transaction charges like registration fees, and stamp duty to be paid to the Revenue Office. Apart from these, if you have invested through a real estate broker, then there are additional brokerage charges. The total transaction charges may be as high as 10% of your investment. In case of stocks, there are a lot of information and tools available online to determine the fair price of a stock. Hence, you will be able to invest your money at fair price and grow your wealth. But in case of real estate, there is no mechanism to know the fair price of a land or a house. The prices are mostly driven by big developers and not by the market. Hence, there is no guarantee that you can buy a house or a land at a fair price. Most of the time, you end up buying at high price. The stock market is regulated by SEBI, Securities and Exchange Board of India. Hence, the investment that you make is safe with a government body. SEBI takes all necessary steps to safeguard the interests of small investors. But real estate is not a regulated market. Often, small investors get cheated due to several scams and fake documents in real estate transactions. Stock market investment is highly liquid. You can start investing with small amounts, and even when liquidating, you can sell only a portion of your investment to take care of your money needs. But in case of real estate investment, you need to sell the entire house or land even if your money requirement is far lesser than that. You don't have the option of selling real estate investment partially. This makes it very difficult to arrange cash during urgent times. Stocks can be bought and sold within short period of time. Once you buy the stock, you have options to sell it next year or next month or even on the same day. Hence, you can tap the opportunity when it comes. But in case of real estate, it is hard to find a buyer when you want to sell your investment. It is not that easy to buy and sell real estate when compared to stocks. Also, you can buy and sell stocks from anywhere in the world. You just need your laptop or mobile with internet connectivity to carry on your transactions. But real estate transactions have to be done physically in the city where the property is located. Stock investments need very less maintenance charges. But if you buy a house and give it for rent, the maintenance charges are very high and will take away 30% of the cash flow that you may receive through rent. It is easy to diversify the investment across different stocks and sectors to keep the overall portfolio safe and stable. But in case of real estate, it is very difficult to diversify as each house or land is of very high cost. Although both real estate and stocks are very good investment which beats the inflation, considering the difficulties in real estate investment for a small investor, stock market investment is considered to be more suitable and profitable for smaller investors. Real estate is an excellent investment for bigger investors who can invest in multiple properties and diversify and can afford a separate legal team to handle their transactions. Hence, for small investors, investing in stock market is the easiest and best way to get started to build your wealth. Subscribe and stay tuned for more fresh videos on how to invest smartly in stocks and mutual funds. Thank you.